Hello D-Traders, as usual we are ready to share the accurate analysis and forecast of the US markets from our experts. For a start, let me remind you that the hostilities in Ukraine remain the major market catalysts. High volatility in financial markets calmed down. The major US stock indexes closed last week in the red. The Dow Jones incurred the smallest losses of 0.7%, the Nasdaq closed with a 2.2% slump. And let's discuss everything in detail. The S&P 500 shed 1.3% or 55 points on Friday due to geopolitical tensions. The benchmark index and the whole stock market are wound down by soaring energy prices, inflation acceleration, the prospects of monetary tightening, and decreasing demand. All in all, the global economic growth is set to slow down. The S&P 500 has slumped 12% since early 2022. The long-term outlook for the index is obscure. Goldman Sachs has downgraded its outlook for the S&P twice in March to 4,700 for the year and from 4,900 in the previous forecasts. Analysts reckon that the profit per share of companies included in the index will rise by 5% instead of 8% in the earlier forecast. The S&P 500 could trade at 4,115 in the medium term, and our analysts predicted a corridor for the index between 4,160 and 4,240 points intraday. Demand for the US dollar remains beyond. Though its index has retreated for a two-year high at 99.60, it's still trading not far away at about 99 points. The recent inflation data showed that an annual rate of US consumer inflation surged to 7.9% in February, the fastest course since January 1982. The US dollar index is expected to trade between 98.80 and 99.50 today. Fed Chairman Jerome Powell indicated that the regulator would increase their funds rate by 25 basis points on March 16 if high inflation still persists in the country. Most analysts agree that the central bank will hardly venture into more aggressive monetary tightening. The US dollar index is also sensitive to the events in Ukraine. It stalled its growth following every piece of news on the talks and asserted strength with every escalating of the military rhetoric. This dynamic comes as a no surprise, as the US dollar is preferred as the safe haven asset. Apart from the Fed's policy meeting and the outcome of the talks between Russia and Ukraine, the economic calendar will also make an impact. The US is due to report on the Producer Price Index for February, retail sales, and data on the construction sector. The highlight of the week is certainly the Fed's policy decision. The US dollar will hardly burst into gyrations because of the political events overshadow economic news, except to the Fed's policy meeting. The USD CAD pair looked inside a wide range as the greenbacks, dynamic and euro prices offset each other influence. On Friday, the loonie found support from an upbeat report on the Canadian labour market. Today, the currency pair again is moving higher amid the strong US dollar. Analysts expect the USD CAD pair to trade in the corridor between 1.2700 and 1.29 with an upward bias. Despite the replacement of key energy exporters and Canada's economic success, investors are alarmed by the risks of a slowdown in the global economy. Meanwhile, the US dollar is flexing its muscles amid pessimism in financial markets and geopolitical risks. Bitcoin closed the last trading week at 37,732, having gained 11.20% over 4 last weeks. Nowadays, more and more analysts warn that crypto has got stuck in the bear market amid geopolitical headwinds. The flagship crypto could plunge as low as 12,000 after several bearish waves. Indeed, investors are focused on the safe haven assets. The overall outlook is bearish, though there are other scenarios. One of them is the polar opposite forecast. In the short term, traders will try to push Bitcoin up to $39,500. Once this level is conquered, the price might drop sharply to 36,720 points. If the digital token is able to hold above 39,500, it could climb to 40,200 points. Financial markets are sitting on the sidelines of the talks between Russia and Ukraine. Investors await policy decisions from major central banks. For the time being, analysts do not foresee any sharp price swings. Nevertheless, the situation might change rapidly on any political, economic or diplomatic news. And we wish you profitable trading with InstaForex. See you tomorrow.